And with me, I have Tempest Security and CEO Andrew Spry and CFO Lotta Iverstrand. Welcome, and the floor is yours.
Thank you. Good afternoon. My name is Andrew Spry. I am the CEO and the founder of Tempest Security. I have with me today our CFO Lotta, who will be talking about the financial overview, and I will be talking a bit about the business that we run and what we do and what we're planning to do in the future. We founded the company 10 years ago, just about today, and the initial business was more or less man-guarding, uniform man-guarding, basically in Stockholm and nowhere else. The first 3 years we did this, and we did it fairly well. The company grew. We started encountering the challenges of growing in the sense that we won larger contracts with a lower margin. We had the challenges of attracting the co-workers and the quality of co-workers that we wanted and that we needed and that we'd sort of based our name on. So after these first 3 years of business, we sat down and we had sort of a think through about what is our future strategy, what do we need to do to keep on growing, and what do we need to do to keep on growing with black numbers or black figures rather than running into the red or running into something even worse, lowering our quality. We had internal discussions, we sat down with our clients, and the take on it was from everybody that we need to become a one-stop shop. We cannot just keep on doing what we're doing today in the sense that we're providing uniform guards. The request from our clients was to broaden the portfolio and provide the whole sort of service that they're looking for where it comes to security needs. We identified 4 divisions at that stage, 3 divisions beyond what we were already doing. The first of which was risk solutions, which in some senses is sort of close protection or bodyguards, if you were. It's risk management, security consultancy, background checks and investigations. We took the first step to broaden our portfolio with risk solutions, and we did this in 2013. When we started off organically by employing people for this and went out to acquire new clients. It went fairly well, I can say, and we were sort of inspired to take the next step. And the next step was technical solutions. So the 4 divisions we'd identified were beyond security solutions, which is, as I said, uniform guards, risk solutions, which is sort of a higher margin, more quality sort of service than just ordinary security. We'd also identified technical solutions and security operations center. So as I said, having done what we did with risk solutions and had if I may say so, a success at doing it, we took the second step of acquiring a company within technical solutions, a small Swedish unit called Svenska Probers Säkerhet AB. They did a bit of man-guarding, but their main interest and their main business was in technical solutions. And technical solutions are the installation and the product management and the service of CCTV, access control, and intruder alarms. We kicked that off as the second stage of our broadening of our portfolio and sort of started growing quite quickly with that as well. Even if we were not growing quickly and profitably with that, it sort of turned out to be a lot more challenging than we expected it to be. We acquired this company in 2014. The strategy, when we set it over a 5-year period. So from 2012 to 2014, we'd done 2 out of the 3 additional divisions that we wanted to start. The last one and the most challenging one is what we've chosen to call the Security Operations Center. Others refer to it as an ARC, an Alarm Response Center. And in its most basic form, that is what it is, an alarm response center, i.e. you receive an intruder alarm and you have somebody go out and check on it. We looked into the possibility of starting our own security operations center, and we did the maths behind it. We spoke to our competitors in the business and decided that the 50 to 60 million Swedish crowns that they expected it to cost from day one until you break even was far beyond what we would ever be able to do. And we sort of put that on a hold and said, you know, if things go better and if things sort of change, then we will look into it. And by an off chance, I decided to call Falck in Denmark in January 2017, and had the good fortune of calling them at the same time that they were looking at divesting in Sweden. And we initiated discussions with them about acquiring their Swedish business, and ran into sort of obstacles in that when they started negotiating with other parties. We couldn't up our game in the sense that we offer them more money than our competitors, but what we did offer them, and I believe what nobody else offered them, was to take over the staff. We didn't have the staff in-house, and we obviously wanted to buy a running business as it was. So Falck chose us and sold the business to us for around 9 million crowns. A bargain deal for us in comparison to what we were expecting it would have cost to start it and run it from scratch, so to speak. The business was running at a loss when we bought it. We did some changes initially where it comes to staffing, so not letting people off, but making it a more effective run operation than it had previously been. And I believe it was in August 2018, so about a year after we acquired it, we were running an operational profit on it. And that's where we sort of had come into the need for equity. We'd built up a rather big organization. We'd done a few acquisitions. We'd set an infrastructure for future growth, and didn't really run out of money, but we realized that we needed to have an equity injection in order to keep the same pace of growth that we'd had so far. And in December 2017, we listed the company on Nasdaq First North, and as a result, were recapitalized and could further proceed with the building of the company as it is today. We were, as a result of this whole growing the company quickly and beyond what we'd actually believed was possible, started running red figures after we'd listed the company. We had a rather large infrastructure. We had an office where we, looking at it now, might have been a bit overstaffed. We started consolidating the acquisitions we'd done. We started looking into our costs and started cutting costs, and have since kept to our growth strategy and more focused our efforts on making it a profitable growth strategy. And I would like to tell you a bit more about that, but first, before I do that, I realize that some of you here do not know who we are, what we do. So beyond telling you about the 4 divisions that we started operating in throughout this 5-year strategy that we set in 2012, I'd like to put the business into numbers that are not purely financial numbers. These are all from 2018. We delivered services in 47 different countries. We have offices in 6 countries. We operate out of Sweden, we operate out of Norway, Finland, Turkey, Germany, and the UK. And from these 6 different offices, we've delivered services in 47 different countries. And it may be services in the sense that we have close protection officers traveling with our clients. It could be seizing counterfeit products. We seized over 100,000 counterfeit products together with police and law enforcement. We have a few clients where we follow and analyze the risk that they have of intrusion on their intellectual property or counterfeit of their products. And where we identify these risks, we help them seize these counterfeit products. We delivered 3,000 background checks, and we produced over 600,000 man-hours. At the end of the year, we had 722 employees on the payroll, and the Security Operations Center handled more than 400,000 actions. Before I put that picture in your mind, I was just about to go into the movement from red numbers to black numbers. It's it's been sort of an idea that we've had since we set the strategy of 4 divisions to move from only delivering uniformed services to more move into higher margin and possibly scalable solutions as well. The acquisitions and the organic growth we've had in these 3 other divisions enable us to move into the higher margin and the scalable businesses of the security segment. The current pie diagram shows you the allocation of turnover as it is today, where you can see that the majority of our turnover is bread and butter or brick and mortar, in the sense that security solutions is, and for a foreseeable future will be, the main part of our business and the main body of our turnover. We have the second largest one being risk solutions. If I were to show you a pie diagram from 3 years ago, risk solutions would be about the same size as the security operations center. So it's grown very quickly and it's growing very profitably as well. Looking at the future, and when I talk about the future, I'm talking about the time horizon that we've set to reach our financial targets, i.e. the end of 2022. We see that the division of, or the allocation of the turnover will be a bit more equal, in the sense that security solutions will be about half of what we do, and risk solutions will have increased even more, as will security operations centers as well. And the technical solutions and the cybersecurity, which we added last year, will slowly start to grow as well. Now, this might not say very much to you about how this is going to become more profitable for you, but I'd like to put a couple of percentage numbers into your head as well. When we look at traditional security solutions, i.e. man guarding again, the margins, the profit margins will be from 3 to 5%. On a very good day, you can reach up to 8% margins, but that is, generally speaking, not very common. Risk solutions is a bit more profitable. It's we're talking 10 to 15% profit margin generally. On a good day, you're up towards 20%. Technical solutions and cybersecurity are not as scalable as the security operations center. They're also a lot of production in the general sense that it's hours we're selling in a consultancy sense, and the margins are between 10 and 20%. Now the kicker for us is the security operations center, where margins up to 50% are not even out of reach, but very possible to reach for us as soon as we've sort of been able to push out the services, or roll out the services fully. And some of you might ask us, why do we not only sell security operations center services in that case? Well, the volumes are not that big, and it's also very the success of it is also very reliable, relying on the fact that we deliver the other services. I'm going to hand over to Lotta now to talk you through the financial figures for us for the last year and the years before that.
Hiya. I'm going to give you a recap of our financial going back to 2015, as illustrated on the screen. The company are increasing turnover year on year very steady. And in 2015 and 2016, the growth was particularly steep. It has since slowed down, and in 2017 and 2018, we delivered a yearly growth of around 30%. So here we're going over a financial overview, and what you can see is the EBITDA and EBITDA margin. So prior to the listing, which took place in December 2017, the company was very profitable, which you can see for the first 3 quarters in 2017. The aim of the listing was to bring in more equity into the company as to support our expansion. The equity that we brought in has been used to partly fund and to partly pay off our acquisitions. We have built a functioning HR, sales, and finance department. We have employed key operational personnel to help us to drive the business going forward. Andrew mentioned that we have launched a security operations center. In addition, we have moved into a new head office as we outgrew our old head office. Understandably, all of those expenses have had an input on our profitability, and as such, we have had EBITDA losses ever since our listing. If one is looking on the columns, which are the EBITDA, one can see actually the trend is going upwards, and it's our firm belief that we are close and we're moving towards profitability in the second half year of 2019. And this is also what we discuss for you who have read our Q2 report, that we believe that we are reaching profitability shortly. So back in April this year, we won our largest contract to date. The contract is with Scania and has an estimated contract value of 228 million Swedish crowns over the contract period of 5 years. We call the 228 million our base contract, our core contract. It excludes additional orders and services that we expect to deliver from our other service lines, such as risk solutions. So the 228 million is purely security solutions. So the contract is worth more to us than that. So we won the contract in April. The engagement started off in June. So it means that we had around 2 months to start the engagement. We had to open up 3 offices in 3 new locations. We started up in Södertälje, in Luleå, and in Oskarshamn. In addition, we employed around 200 new employees, all which needed to undergo 1 month training. They needed to have equipment such as uniforms. We needed to buy equipment for our new offices. We call all those costs the startup cost, and the total bill for the startup cost for Scania came to approximately 2.9 million Swedish crowns. As this is such a significant amount, both in size and in importance, in our financial report for the second quarter, we have chosen to describe this as a non-recurring item. And what I'm trying to illustrate on this screen, if you look at the yellow line, that's our normal trend. The blue line excludes the non-recurring items. And as such, you can see it's a significant improvement in profitability. So excluding the non-recurring item, our margin for the second quarter came to minus 3.6% compared to, let's see, the 7.9, which it would be if you're just looking at the actual figure. If we then compare the minus 3.6% compared to the same period last year, when we had 11.1, minus 11.1 in margin, you can see that it's actually, we're improving our profitability very much. And for us, this is an important sign. We see it to be a sign that we are close to reach profitability in the short future. So that was just quickly on our financials. And now I'm going to hand back to Andrew, who's going to touch a little bit on our future developments.
Thank you. As I briefly explained earlier on, the future development of the company is very much in line with the strategy that we've set. We're looking at a transition, a shift from traditional uniform man-guarding services towards more qualified services, higher margin services, and to some extent, scalable services as well. The shift encompasses what I was talking about, where we're going from towards risk solutions, we're going towards technical solutions, and we're going towards security operations center solutions. The last one of those, the scalable services, is something that's very interesting. As I said, it's up to 50% margin. On a good day, even more. We started to build and implement and sell a solution with which relates to duty of care, i.e. the employer's responsibility for their employees when they're about places outside of the office, whether it be in Stockholm or abroad, called Global Watch. Global Watch is an application where you can tell your employer where you are all times, or if you give the employer permission, the employer can track where you are at all times. We can push information out, and we can extract information from the employees, where they are, what's happening where they are. If they're in need of medical help, for instance, we can help them find a reliable doctor or a dentist even. It's an interesting segment, and it's something that we're working very hard on exposing to our clients. When we listed the company, we set a financial target for our turnover at 500 million Swedish crowns for 2022. I've tried to illustrate it in the diagram. So you've got full year numbers up to 2018, and then the first 6 months for 2019, and then the grey staple is for 2022, what we need to turn over in order to achieve our targets. We are quite confident that we will. The least of our problems is sales at the moment. We've had quite a bit of success for the last 2 years where it comes to clients coming to us. Honestly, it's mostly been within uniformed security services up until about a year ago when we saw a significant change. We acquired a Gothenburg-based company called Gothia Protection at the beginning of 2018, and as a result of that, we got an exposure towards the international market where it comes to risk solutions. And we're sort of getting traction now where it comes to the transition, and the risk solutions part of our business, looking at it out of a percentage perspective, is growing a lot faster than anything else. And this growth within risk solutions has made us look at that part of a business as not on a global scale, but on a pan-European scale. We've as I mentioned, we've got offices in 5 other countries, but we've also got a lot of operations going on in the European Union for companies based outside of the European Union. So we've got a lot of American clients. We've got quite a few clients from the Asian side as well, and we've started, and we're working on establishing ourselves in a couple of more countries than we're already at. We've built a strong infrastructure for the future growth, so we're quite confident that what we have today is more than enough to support the growing business that we have. And looking at it out of a global capacity, we have a very strong partner network today where it comes to mainly risk solutions. And we rely very much on this partner network where it comes to delivering services to our Swedish clients when they're out traveling or when they need support abroad. We have a long-term target for a 10% EBITDA margin. This is after 2022, but we are, with what we've seen so far in the development of the company, quite sure that we will reach this as well. So to sort of sum it up, we'd just like to say that we are on track. We are operating in a steady sector, a sector that is growing faster than most sectors. And in this, we are one of the fastest growing companies. We've had a static market cap since our IPO, but we have company sales that have increased by over 50% since the IPO. And as Lotta mentioned, we're on track to reach our financial targets, and we're turning towards profitability in the second half of 2019. So we're pretty sure that what we're doing now is the right thing. Thank you.
Okay, thank you for the presentation. We are running a bit behind the schedule here, so we won't have time for that many questions. But in order to reach your financial target of 500 million SEK, you need to grow about 22% yearly up until then. Will that be mainly achieved organically, or are you also looking at acquisitions?
We are looking at acquisitions. As I said, the European expansion that I was talking about is it's going to be a mixture of organic growth and acquired growth.
Okay, and you also gave the picture that it is risk solutions that will drive mostly of the growth. Can you elaborate a bit more about that, and how do you stand out in the competition?
I believe risk solutions will be the part of the business that grows quickest, but as I also showed in the pie diagram, the security solutions part of our business will stand for approximately about 50% of our turnover. Where it comes to how we stand out towards our competitors, where it comes to comparing our company to companies that mainly work in uniformed security services, we have a much broader spectre of services that we deliver. So we are not really on a comparable basis with them. We have companies that only work with risk solutions. They don't run their own security operations center. They don't do technical solutions. And in most cases, they don't work with uniform guarding. So we're sort of not on a comparable basis with them either. When we look at ourselves, and when we talk about ourselves to our clients or potential clients, we like to see that we are in a sort of a unique situation where we've got the broad scale of services.
And the last question, the security operations service demand for that, is that driven by the other two sectors, the uniformed guards and the risk solutions?
For us, so far, a lot of the incoming clients have been through the other divisions. We haven't had a separate sales organization for the Security Operations Center. It's something that we have now started to work on. We've got one person in charge of building a sales organization, and we believe that part or a large part of the future profit will come from there, even if the volumes are not from there.
Okay, thank you for that, and a warm round of applause for Tempest.
Thank you.